Hi there. So one of the biggest reasons that home sellers lose potential and highly interested buyers for their home, and then equally as disappointed home buyers walk away from a home in their perfect neighborhood, is because of deferred maintenance. It's failing systems and upgrades that need to be done, but neither party have the cash set aside to do the work. So if you found yourself in this situation while searching or selling a home, then this video is for you. I'm Megan Marsh, owner of Keystone Alliance Mortgage and co-host of the CoLab podcast. Keystone Alliance Mortgage is a mortgage brokerage, and we believe in our clients' dreams, and we fight relentlessly to find solutions to make these financial dreams a reality, like the home improvement loans we're going to talk about in our video today. Make sure you hit the subscribe button and the bell so that you get notified when we release new videos that will help you with your home buying and home owning journey. And if you have questions as I'm going through this information, please leave it in a comment below so we can address it for you and everyone else that has the same question. Remember, no question is stupid. Getting a mortgage has become more complicated than buying a stock. Everyone gets confused, and not all mortgage pros enjoy teaching as much as they enjoy selling you the mortgage. We know that there are many of you out there frustrated with the options and homes for sale on the market. The inventory is so low and prices are high. It's a time that you need to become an expert on a loan type that most people know very little about. So in today's video, we're going to be walking through the basics of renovation loans or home improvement loans that you can use to find and create your dream home. You see, the problem lies in a few places that most people don't realize about improving a home. So when you're going out and looking to purchase a home, it's really hard to save money to renovate the house. When as families, we're paying so much nowadays for daycare, college, student loans, and the increasing costs of gas and groceries. So once you save up a down payment and closing costs and you buy that home that you find, there's nothing left over to make any big renovations. And if you purchase putting 10% or less down, which is many of you, there isn't any equity to tap into. Equity is the only way to borrow extra. Equity is the difference between the value and your loan. Personal loans, credit cards are very expensive to pay off, and lenders don't allow sellers to escrow for work to be done after closing. What lenders and banks do allow is for buyers and homeowners to take advantage of a loan that allows you to borrow extra for those renovations. So let's explain and walk through how it works with these loans. So first, you get pre-approved to purchase a home, just like you would any other mortgage. Second, you start interviewing contractors and find the one that you would use when you find that house with great potential, but needs renovations and work. And then the second piece is that at the same time, you start working with a real estate agent, looking at homes, and you really want to make sure you find an agent that's an advocate for using a renovation loan when you purchase. The third step in the process is that once you pick that contractor that you're going to use, let your loan officer know so that we can begin collecting the right documents from the contractor. Because the fourth step, which is finding a house, that's where you have to ask that contractor that you've picked to come walk through the house with you before you write up an offer and give you a rough estimate of what the cost entails for the renovations that you need. And then you'll make an offer with a longer closing date than a normal real estate transaction. Normal in our country today is about 50 days. I recommend for renovation loans, you do 90 days. There are ways to make it faster, but that is the recommendation because the last piece is that you're going to apply for your loan. And in order to apply for the loan, to lock an interest rate, to order an appraisal, you have to have the final bid from the contractor. And as mortgage professionals, we need to have all the documents from the contractor that is pages and pages long. Also part of this step when you make the loan application is the appraisal being ordered. And the appraisal cannot be ordered without that bid from your contractor because the appraisal is done a little bit differently. Normal purchases need just the sale price. And a home improvement loan has two values, not just what you're purchasing it for, it has that, but an as completed value after the renovations are going to be done. So that appraiser needs to know the things that you're going to do on the home, and they estimate what the value will be with everything new. The rest of the process is relatively the same compared to other loan programs. The biggest differences are the ones that we talked about above. And also, there's a few other little pieces that we're going to dig into as we go through this video. So now let's take a look at the different loan types that you can apply for and point out the things that would make one better or worse for you. So the loan types have to do with government and conventional loans. So FHA, one of the government loans, has what's called a 203K loan. There's a 203K full loan and a 203K simple loan. Those are the government renovation loans. And then the conventional loan type is called a home style renovation loan. There's also a VA renovation loan, but currently in the beginning of 2021, the Veterans Administration has put that product on hold. We'll hope it comes back in the near future. The last type is a home equity line of credit. Once you own the home, you can apply for, if you have equity, to get a home equity line and use it for renovations. So is the rate different or the same than regular mortgages? This is an area that people do get caught up on. So interest rates on renovation loans are a touch higher than a regular FHA or a regular conventional loan. The highest I have seen them in the last 15 years is about 0.5% higher, but typically they're only about 0.25% higher. And there is an additional underwriting or origination fee that gets added when you're doing these types of loans, but it's very minimal in comparison to what the loan allows you to do. And if you compare this slightly higher cost spread out over 30 years compared to using credit cards or personal loans, these mortgages will save you a ton of money. What are some of the additional costs to an improvement loan? Well, there are the re-inspections. As work gets done, the appraiser has to go back out and check, and each one will cost around $200. There's what's called a contingency reserve, which means if you are doing $30,000 in renovations, the bank is going to decide between 10 to 20% of the amount that you're using for renovations. So that would be $3,000 to $6,000 that they set into an account in case the work goes over. If you don't use it, it will get applied back onto your loan at the end of the whole process. And last but not least, there's what's called a HUD consultant. So on the 203K loans, if your total renovation costs exceed $35,000, or if you have a job that involves the foundation, you have to get what's called a HUD consultant to go out and to work on the bid with the contractor. And that HUD consultant is going to cost you anywhere between $350 to $1,000. It's based on the total renovation amount that you're going to be putting into the home. Now let's review quickly the requirements to qualify for these loans. So really, it comes down to a couple things. The first is credit. A good rule of thumb is that the FHA 203K loan is going to be best for home buyers whose credit scores fall below a 680, or if you don't have a lot of money to work with and you really need that 3.5% down payment. If your credit score is above a 680 and you do have some money that you are willing to put into the house, then the home style renovation loan is a great option. Although the home style renovation for first-time homebuyers does allow a 3% down payment. FHA is 3.5% down, and that is the purchase price plus your renovations combined. Property type is definitely a factor to consider. Both loan programs allow it for single-family homes. It's when you want to buy a 2 to 4 unit that I think FHA is one of the best options that allow you to not shell out a lot of cash out of your pocket. Condos, both loans do condos, but FHA has to have the condo approved already. So if it's not approved, I wouldn't recommend going with the FHA route. And manufactured homes are not allowed with either program. And so all of these loans, both of them will work on primary residences, and the rates stay great on those. But only the home style loan will allow you to renovate a second home or an investment property. And so how long does it take to close? So the average real estate transaction I've discussed in other videos, the realtor.com say it's about 50 days from signed contract to the closing. the renovation loan process does take longer. It takes about 90 days to complete if you are working with a lender that has experience with renovation loans. If you're working with someone who hasn't done it before, I would recommend looking around a little bit further. Now let's dig into some pro tips, some must-know things that I think makes the process go a lot smoother. The first one is picking the right contractor and picking one that's going to be the general contractor. I do not recommend having 3 separate contractors who all have to get documents turned in. It is a paperwork nightmare. Get one person who works and subs out to the other contractors you're going to need. And then also make sure you have a real estate agent who's an advocate of these loan programs or who has done them before. If you work with someone who hasn't, it might not go as smooth. And my last tip is make sure that you don't get hung up on where's the best interest rate? Where's the best interest rate? These renovation loans are going to save you a ton of money with deferred maintenance. They're going to help you sell your home for more down the road. So if your interest rate is slightly higher than what you could get without doing the renovations, I still recommend using this type of loan as it spreads out the renovations over 30 years, still at a great interest rate. How hard is it to get these loans? A lot of people will ask that. And it's just as easy to get approved for a renovation loan as it is for any other type of loan. It's just that you have a lot more homework and you need to be more diligent and help your loan officer and lender get the documents that they need from the contractor and all the different parties that get involved on these renovation loans. And I'm sure that you have many other questions about the renovation loans, which is why I want to make sure you stay tuned for our next videos where we will be comparing the FHA 203K loans to the conventional home style options. We will walk through the types of home improvements that are allowed, the main differences of the 2 loan types, and much, much more. We have a link in the description to this video that you can see that right down in the description. Thank you for tuning in today. We can't wait to see any comments and questions or feedback that you have for us. And if you liked or learned something from this video and would like to see more, make sure you subscribe to the channel, hit the bell so you will get notified each week when we release a new video or webinar. And remember, finding the right mortgage advisor who will fight for your dreams and educate you on how to build a financial foundation for your future is what will set you up for success. Click on the link below and schedule a call with one of our mortgage experts today.